Hey friends, Sean from SGT Report here with one of our favorite guests ever, and somebody we're always eager to talk to, Jeff Nielson from Bullion Bulls Canada. Mr. Nielson, welcome back.
Always nice to be here.
Well, it's always a thrill to have you, man. Now, we are seeing some big, epic moves in the physical silver market. As you well know and have written about, Silver Eagles hit an all-time record for sales in January, despite the U.S. Mint shutting down production, Jeff. This is big news, in my opinion. 7.4 million ounces sold in January alone.
Well, you know, what's interesting here is in my conversations with bullion dealers, they report that their own business, isn't especially booming. If anything, things are kind of, flat and boring. But this, of course, are the dealer orders that are being placed that are eventually going to be sold to retail customers. So these aren't, direct retail purchases of themselves. These are the wholesale dealers purchasing from the U.S. Mint. So this is basically showing their own anticipation for the market, but also even at more or less current demand levels, what we're seeing is a real struggle with the U.S. Mint and, of course, Canada's Mint as well to meet demand. And, of course, this comes with less than 5% of the public, probably much less than 5% of the public, doing any purchasing at all in this market. So you have to ask yourself, what happens when the average investor actually becomes aware of the silver story and that demand figure, increases by a factor of 4 or 5 or perhaps 10.
Now, for those who may not know this, tell people about the Royal Canadian Mint. They warned recently that they're having a hard time meeting demand too, correct?
Well, the word that came out in the media that they used is that they're attempting to manage demand, quote unquote. And of course, ultimately, this is exactly what's being done in the U.S. The idea with creating these supply bottlenecks is that you frustrate the market. And it's the first thing that happens when the mints themselves limit supply is that the dealers go and they jack up the premiums. I mean, this is just supply and demand. If supply is tight, prices go up, premiums go up. Of course, if the dealers can't get as much as they want, they're going to want to increase the margins on each coin. This is only, natural behavior. So it's an inevitable result that when they clamp down on supply like this, that it's going to push up the premiums and have a depressing effect on overall demand because nobody likes to pay a large premium on anything they purchase. So, there's this sort of dual effect here of attempting to clamp down on demand and at the same time guard their own dwindling inventories.
Okay, now let me ask you this, too, while we're on the topic. I think it needs to be covered. We all know that Eric Sprott and the Sprott Fund has had a difficult time acquiring the physical silver it needs to back its physical silver fund, PSLV. Whenever he wants to get more silver, it takes him 3+ months to secure the physical silver and get it shipped. But meanwhile, just the other day, we saw the SLV Fund add tens of millions of ounces practically overnight. Why don't you tell us about that?
I wish I could give your viewers specifics here a bit, but it's really difficult to try to say exactly what's taking place when we never get a chance to see behind the curtain. So obviously the bullion banks are the caretakers of what limited bullion inventories are available, and stockpiles for that matter as well. But we really don't know precisely how tiny they are. Have there been some secret government stockpiles they've been able to tap into? And, of course, how much silver is actually being cleaned out on a month-to-month basis by the buyers? Because, of course, what's been done to delay the complete collapse of inventories is to buy off the buyers in the futures market with quote-unquote cash settlements. And the rumor was that these buyers would be getting roughly a 25% premium on their contracts at the COMEX if they agreed to take paper instead of silver. So with these things going on, we know there's a little bit of silver out there. So whether, in fact, somehow it all got put under SLV's title for the moment, that's a possibility. But the point is over the long term, it's not possible for these paper bullion funds to add massive quantities of silver while people who we know are taking physical silver, report regular problems.
Yeah, Jeff, while you were talking, I did call up the article. It was posted by Zero Hedge, and we put it on SGT Report. The SLV reportedly added 572 tons of silver in one day. That's 18,378,000 ounces of physical silver. Where do you suppose that even came from?
Well, I hadn't seen that number. I mean, that does seem to be stretching the bonds of credibility to the utmost. The point is there's no obvious source, and except an interesting development was an item I noticed in the news that J.P. Morgan, or was it HSBC? No, it might have been HSBC, was buying up an interest in a bullion miner. It was either a gold miner or a silver miner. But this is the other thing that could be happening. And, of course, whether it happens openly or not, what could be happening is that these banks could start going directly to the miners themselves, buying interest in the miners and diverting supply directly to their own vaults.
Well, Jeff, I think it just speaks to the fact that this is all an illusion. You write about this endlessly over at the blog at Bullion Bulls Canada. I mean, for folks that aren't tuned into the blogging over there, you should tell people that you are very active over there on a daily basis, and we try to keep up with you by posting your material. But you just finished one recently here where you're talking about more U.S. propaganda about the GDP. Why don't you tell us about that? Because, by your analysis, the contraction of the GDP in the United States is actually down 4 to 5% on an annual basis, which is very much a depression.
Well, that's just a really crude ballpark estimate. You could probably get a more precise number by going to John Williams of Shadow Stats. But basically, there's a real simple dynamic here. Every GDP estimate must be deflated by the prevailing rate of inflation. And that's because it's supposed to be measuring actual economic activity and not just price changes in the economy. So you have to strip out all price changes, the full rate of inflation, in order for the GDP estimate to be meaningful. Well, of course, we all know that that the inflation statistic is being grossly understated by an enormous amount, 8 to 10%. Now, the way that the deflator works is it tends to be a smaller number than the actual inflation rate, because of a lot of complex economic reasons that I won't go into. But by my estimate, with this 8 to 10% understatement of inflation, this would translate into roughly a 4 to 5% overstatement of U.S. GDP. And so when it was officially reported today that GDP contracted by 0.1%, we can easily add 4 to 5 percentage points onto that, and possibly more, possibly a touch less, but I would suspect that that's a conservative estimate. But the point is here, it's not simply the GDP number that struck me, but the reaction of the bullion market. And what was so significant is that what we've seen over almost the entire past 2 years is when any kind of bearish economic news or deflationary economic news comes out, the banksters are able to use that propaganda to drive down bullion prices, with the argument being, industrial demand is going to collapse, blah, blah, blah. But, of course, the reality is that with any sort of deflationary, depressionary conditions, this means that our crippled economies are going to see our deficits shoot up higher, and the only thing that they can do, since they're all insolvent, is to print vast sums of additional money for stimulus or just meeting the interest payments on the debt. And so this is why any sort of deflationary, depressionary news is in fact extremely bullish for the bullion market, and today for one of the few times we're seeing prices reflect that reality.
I'd be remiss not to ask you about the action we're seeing in the platinum market, and maybe palladium too to some extent. Platinum has been on an absolute tear, and my take is that the banksters are not in a position, nor have they had an interest in manipulating the price of platinum and palladium on a paper basis like they do gold and silver. At any rate, what is your take? Because we're seeing platinum take off here price-wise.
Well, there were sort of two aspects to your question. Let me see if I can handle both of them. I'll deal with the latter part first, where you suggest that there may not be the same degree of manipulation. That is true, but the manipulation is still quite extreme. And in fact, at a recent GATA presentation I saw at Vancouver Resource Show, Ed Steer pulled up a chart showing the short positions in proportionate terms with the various commodities. And the four largest, by far, were the four precious metals: gold, silver, platinum, palladium. Silver, of course, was the largest by far. Gold was behind that, a reasonably proximate second. And then platinum and palladium dropped off from there, and then of course all the rest of the commodities fall off way below those totals. So there is significant manipulation in those markets, but it's definitely not to the same degree. And so we do see from time to time these other metals markets trading more or less purely on fundamentals. And so that'll get into the second part of your question here. And I actually wrote an article a few weeks ago comparing the platinum market and the silver market, because there was some interesting news put out about the platinum market indicating that, in fact, back at that time, it was actually quite soft. This is, just recently the prices have soared again, but it was explaining why, in fact, platinum prices had been falling quite significantly in the weeks before that. And what was noted was that over the past decade, recycling in the platinum market had quadrupled. And so, along with a surge in a new supply source, industrial demand for platinum had been more or less flat, because unlike silver, the applications that it was used in were not growing in a steady upward curve. And so this is what we saw in the platinum market. New supply, demand softening, prices sagging as a result. Classic supply-demand behavior. But what do we see in the silver market? Well, over that same 10-year period, recycling in the silver market has been relatively flat. It's only increased by roughly 25%, not like the 400% in the platinum market. And this is despite the fact that the price of silver has increased by a factor of roughly 6 over that time span. So what we're seeing here is that despite a large increase in the price of silver, the price is still so low that it's not sufficient to generate a significant recycling response. And so this is yet another way that we can see obvious manipulation in the silver market. It's the refusal of the market to behave in accordance with the principles of supply and demand, and the only thing that causes markets not to obey those principles of arithmetic is manipulation. So if we ever saw silver be allowed to rise to a price that would represent a fair market value, we would see recycling in silver soaring just like it has in the platinum market.
That's interesting. Well, for those of us who have been paying attention for any period of time, here's what we know. We know that the government of the United States and most of the governments around the world at this point are corrupt. The leaders that are in power are corrupt. We know they're manipulating the prices of both gold and silver, and apparently these other metals too, because they don't want people to think that their fiat dollars in their wallets and purses are worthless or could become worthless. Jeff, what is your take on acquiring physical precious metals moving forward? Has your attitude changed? Should people scale back and maybe buy more supplyable food stores, or is precious metals still the place to be?
I think a lot of it depends on your own personal perspective and how you view assets. For me personally, I have a full belief and knowledge in the fact that gold and silver represent the best forms of money, quote unquote, which we've ever invented. And in our complex 21st century economy, one thing we cannot survive without is functional currency. Even 150 years ago, if there was some catastrophic collapse, it would have been conceivable to see things falling back to some sort of quasi-barter system. But that's not possible today. You can't see a steel mill bartering with a coal mine or an iron ore mine to supply them with steel in return for their ore, and certainly the workers aren't going to take steel as wages. So the point is that barter is not a possibility in any sort of currency collapse situation. We have to have functional currency. For me, it's right up there with being a necessity like food. And the one thing that's good about bullion is it's much more compact than having a whole storage area full of food commodities. So I still recommend bullion as being the ultimate compact commodity to have for people in survivalist mode. But naturally, you can't forget about the basics, and I certainly wouldn't discourage people from having a stockpile of food items that they can reasonably fit into their storage space.
Yeah, and first an observation and then one final question for you. You know, we've got a report out of InfoWars here saying that the Rothschilds appear to be hoarding physical gold in the face of a coming collapse. I mean, it just makes sense. We all know that the collapse is coming, and the problem for the controllers and the powers that be of this particular current paradigm is that word is out, and the central banks don't even trust each other. We've seen that with the Bundesbank trying to acquire its physical gold holdings back from both the Bank of France and from the New York Fed. Of course, they're going to draw that out over 7 years, which I think is hilarious. I think that just means that they're going to take newly minted precious metals. Is that your take?
Yeah, I just view this as a stalling tactic because there's no timetable spelled out at all in terms of when this bullion is supposedly going to be transferred. So, in fact, every ounce that's supposed to be coming from New York may not even be scheduled to leave until 2020. So in that respect, it seems to be much ado about nothing, that they're simply announcing something to both mollify the people within Germany who are terrified that their gold isn't there, and to give this veil of normalcy to the sheep in the West that, oh yeah, everything's fine, you know, the transfer is going to take place, don't worry about things. But it certainly appears to me to be some massive sham as well.
Well, Jeff, before I let you go, is there anything else you want to touch on?
You know, I would just encourage people to step back and never forget the big picture and to think like the big buyers. And what the big buyers think is they are happy to see metals prices remain restrained because it means they get to buy far below market value in preparation for what's coming in the future. And that's the thought that I think people should really try to remain focused on at all times.
Yeah, I think that's a great way to look at it. That's the way I've personally looked at it for my own stacking portfolio, too, is, you know, for me personally, I'm really glad the collapse has been delayed. I'm super glad that the collapse hasn't come for a variety of reasons. Number one, I don't want to see anyone suffer. And you and I both know that 98% of the people are going to suffer because they don't have a backup plan. They don't even have retirement money, most people in this country, much less physical precious metals. But, you know, for me personally, Jeff, I'm always thrilled that the collapse hasn't happened because it's given me another year or 2 or 3 or 4 years longer to stack than I thought I had.
It's given us additional time to prepare. And for those people who are maybe just tuning in to your broadcast for the first time or my commentaries, it's not too late for them to start preparing. There's still some time, but you have to act quickly because the whole house of cards could collapse at any time now.
Well, and just so the audience knows, they can find your great work, Jeff, your original work, which is some of the best analysis out there about the precious metals markets. They can find you over at bullionbullscanada.com. But in addition to that, please tell people once they're on the website, how do they find your blog? Because you're busy on that blog daily.
Well, our forum has a very active community on it, and so there's a daily discussion I have there, which I call the Daily Grind in our gold section. But we talk about geopolitics, economics, everything. So people are welcome to come there and join in the conversation. We'd love to see them come by.
Jeff, is there a tab they should look for, or how do they find that on your main page?
They just come to our site and check out the toolbar at the top, click on the bulletin boards, and they're into our forum and can be part of our community. We'd love to see them.
Okay. Thanks, Jeff. I want to thank everybody for tuning in, sharing this information with others, and we're all in this mess together. So sooner or later, we're going to beat these criminals because truth always wins. And we'll talk again soon. You take care of yourself, Jeff.
You too, Sean.
Bye-bye.
Bye-bye.
Well, that'll do it, guys. Thanks for watching, and check out sgtreport.com for all the latest alternative news, and don't forget about thelibertymill.com for real news 24/7. And a quick note about sponsors. I've never asked for donations, and I don't have a paid subscription. Everything on SGT Report is free, so do me a favor and support the sponsors. We have a great new sponsor, campingsurvival.com. They're good folks. Click on through and visit their site. Thanks for watching, and have a great week. Good night.